Ladies and gentlemen, here's Goldman Sachs weekly chart. Here's the importance of respecting Fibonacci levels and reversal zone. This is the levels I developed after 20 plus years of studying Fibonacci in 2008. First strategy. So, all the levels in front of you, proprietary Fibonacci levels. Did you exit Goldman Sachs at reversal zone? What were the earnings from Goldman Sachs? Who cares? Does not mean a thing. Fibonacci set, this is reversal zone, get the heck out of position, done. Price reversed completely. Anyone surprised? Should not be. Accuracy of Fibonacci levels I developed in 2008, high 90%. If you listen to the students on the website, they share so. Because multiple students trade long-term stocks, options, and ETFs. So why in the world are buyers coming here? Weekly charts change only every few years. Let's take a look. Bullish rally on Goldman is unstoppable. Where is it coming from? Here's bullish rally on Goldman. Did you acquire position on Goldman at reversal zone? You're not sweating bullets. You're not being tortured by day trading. Day trading is not your cup of tea. You will always and forever benefit from Fibonacci levels. Goldman will take a pause at this level. This is crucial Fibonacci resistance. It was crucial Fibonacci support in 2015. Taking Goldman a year to break through this level. How much time will it take Goldman to break through this level? Expect to see Goldman at 200. But where to enter positions, you must know the rules for. Because what Goldman can do next is the following. It can crash and burn back down to reversal zone. So if you don't know the rules and you see Goldman crashing and burning, ouch! Because no knowledgeable trader on the planet acquires position into this level. Ever. This is crucial Fibonacci resistance. Entry into it, not an option. And this is the exact same thing that's happening on S&P. So if you're wondering what in the world is S&P doing right now, why is it so comatose? Because bullish rally we've taken advantage of in a trading room on Monday from institutional support, overextended. Price came to reversal zone, but sellers respecting this support, confirming institutions buying every single pullback. So, entering long into this level, not an option. This was very powerful example yesterday. As you saw, bullish trade from as low as possible. And if you know where reversal zone, this is where you exit. Quite a pickle. We're in the exact same place this morning. And once again, institutions reminding you, they're acquiring every single pullback. But exact same reversal zone on S&P hourly, which is your guiding light for day trading entries. As exact same thing playing out on any instrument that you trade. Price action remains the same. Doesn't matter what you trade. So ladies and gentlemen, oil news in the next 10 minutes. I have no idea what oil news will be. It doesn't matter to me whatsoever. Fibonacci levels were always displayed in front of you far in advance. This level's been in front of you for the last 2 years. This is where bullish rally came on oil from weekly chart. This will be focus of the bootcamp, institutional levels. Trade with institutions, not against them. Bullish rally came to crucial Fibonacci resistance. This is where you saw a phenomenal sell-off, where oil struggled to break through this level for many months. Where did you see buyers step in from? No surprise. Fibonacci reversal zone. Oil is heading to here. After this, oil is heading to here and here, but where to enter positions remains the key. You cannot randomly place a random order. What do you do if price will crash and burn through this support to here? You would be lost if you don't know the rules. This is institutional support. This is what we've been watching and discussing for weeks. This is retail levels. This is where buyers came from last week. This is a retail levels been present in front of you since October 1st. This was crucial Fibonacci resistance, the end of the minor trend. Remember that this is retail resistance that's taken oil many days to break through. This is institutional resistance that became institutional support before oil will reach this level. Is it possible oil will reach this level today? Absolutely. Bullish rally can propel these levels in a blink. But pushing a random market order, not an option, as risk management is everything. Oil monthly levels been displayed in front of you for the last 4 years. Students been acquiring position at 30. Monthly chart struggled at this resistance that correlated with crucial weekly resistance for 5 months. No surprise whatsoever. This is what oil said since 2008. This is the chart that's been present in front of you since the start of the website in 2011. These levels can play out for the next 100 years. How to trade them, you must know the rules. So, back to oil to retail levels. Trade with institutions, do not trade against them. So, if you witnessed what crucial institutional support is, bullish rally overextended. No matter what happens on oil, before oil will head to here, you need a powerful pullback. You cannot acquire random bullish trade without rules. So, lower oil goes, better off you are. We don't care if news is bullish or news is bearish. If oil is here, you are trading with institutions, because this is institutional support. Right now, bullish rally overextended. We know that for weeks and months oil been showing us where it's heading to. No ifs or buts about it. But rules for your point of entry and risk management remains everything. As oil reminded you on that very famous day, when the most powerful bullish news in 18 years did not mean a thing, as Fibonacci Reversal Zone was reached at the time of bullish oil news release. Most powerful bullish news, and I say bias is bearish, and oil crashed and burned 500 points. And this is what I'm warning you right now. I don't care what the news is. Jumping on bullish wagon randomly as day trader not an option. This is your first support. No matter what happens, bullish rally overextended. You need powerful retracement, you need the rules. If oil here, you're acquiring position with institutions, as played out on famous October 13th, when news was extremely bearish, but I said bias here is bullish. And oil rallied up. How many points? Many, in a matter of seconds. So, that was bearish news last week. Respect news only due to volatility. 200 points bullish rally. Agree on that? And that's the power of the price and Fibonacci. You always must respect news due to volatility. But price and Fibonacci tell you far in advance where price is heading to. So oil news expectations plus 2ME. Anything below this number is bullish news. Anything above this number is bearish news. You must absolutely know the instrument of your choice, as on oil, news is completely reverse than on stocks. Insane shortage of supply on oil. Take a look at that. Is this gonna be the news prior? What are we witnessing on oil? Pay attention in the next few minutes. What will happen on oil? Will oil skyrocket finally to 57 and 60 in the next few minutes? Will it retrace all the way back down to Fibonacci support? That is crucial. Jumping on bullish wagon randomly, not an option. Extremely bullish news. Why in the world is oil selling? Why are we seeing bearish push? We know extremely well that oil is heading to here. But jumping on bandwagon randomly, not an option. Rules are everything in life. If you respect the rules when you drive, you must respect the rules when you trade. So, I will continue bringing up chart on oil. No knowledgeable trader jumps on bullish oil train despite extremely bullish news. Lower oil retraces, more powerful market will become. No bullish rally in front of you. Oil is stuck. No one randomly placed serious volume on oil. Not yet. Doesn't matter what Microsoft earnings are. Bullish rally overextended. You knew the rules, you acquired position at reversal zone. Second point of entry at crucial Fibonacci support, 22. Last point of entry, 48. Acquiring position at reversal zone, not an option. Remember what Microsoft had done last year. As always, by the time you come to reversal zone, you are in significant profit. As S&P, this trade continue rallying. Agree on that? And that's how you trade, always with institutions, never against them. You're witnessing exact same decision point 2 as you witnessed on Microsoft Monthly as crucial Fibonacci support. As exact same decision point 2 as crucial Fibonacci support on S&P Monthly. So if you are in this trade, you are trailing very, very carefully. Why is that? Because by the time you come to these levels, it will be daily resistance. And that's how price moves every time. Decision point 2 will forever remain your key target. When price comes to decision point 2, knowledgeable trader always moves up outside of break-even. Correction from reversal. If you know Fibonacci strategy, you know. Price comes to reversal zone. You do not acquire position. You always acquire position from crucial Fibonacci support, but only if rules are met. And always and forever you separate correction from reversal. And that's the core of the bootcamp. And that's the reason I live and breathe what I do. We're down to 7 spaces. So when I get the email and people tell me I'm gonna wait and sign up on October 30th, we may not have any spaces left by Monday. I don't know. Sooner you start the course, more prepared for the bootcamp you will be. By the time you come to the bootcamp, you will know the rules. I don't have any plans for another bootcamp. Bootcamp is the event that happens only a couple of times a year. No plans whatsoever for another one. None. Bootcamp, part of the course. After bootcamp, we will take a well-deserved vacation. Until November 28th. may reopen on November 29th. We'll decide that on the last day of